I used to take trades I wasn't sure about until I learned this simple concept. It helped me avoid bad setups, unnecessary losses, and drastically improve my win rate and conviction. And just a few weeks after applying this concept, I started seeing real results in my trading. So let me show you how. In this video, I'm going to be talking about the most important price action concepts that has helped me see improvement in my trading results. And I believe that they can also help you as well. So first, I will be talking about the 3 types of candlesticks and why location of the candlesticks matter the most. And then we'll talk about trends and the best places to enter and exit trades to give you the best possible risk to reward ratio. And as a bonus, I'm going to be showing an example that ties everything all together. So make sure you stick around so you don't miss out on this important information. When we're talking about price action, there are 3 types of candlesticks that need to be understood before you start seeing consistent results. Very quickly, just to summarize how candlesticks work, you have the bullish, you have the bearish, and you have the neutral candlesticks. When it comes to the bullish candlestick, it means that buyers are in control. The candle here opens up at this price, right? And at some point in time, sellers try to push this price lower, but the buyers were strong enough to push the price higher and close it. So that candle would be green, and it means it was bullish and buyers are in control. The bearish candles are the opposite, right? It means that at some point in time, right, the candle opened up at highs, buyers try to push it higher, right, and they failed, and then the sellers pushed the price down and we closed at lows, showing that sellers were fully in control. And then you have the neutral. Neutral just basically means that the buyers and the sellers were just struggling at that point. They could not win. Like, the sellers didn't win and the buyers didn't lose the fight, and it closed like a doji. Like, that's what it's called, a doji candle, right? So you have the neutral candlestick, right? It means that neither buyers or sellers won the fight. It opened up, it pushed higher, it pushed lower, and ended up closing right at the opening price. So sellers didn't win, buyers didn't win. It's more like an indecision candle. So moving on, I'm going to be showing my top 3 bullish and top 3 bearish candles that you need to know. If you know how to use these candles, including the location of where they appear, you're set. So stick around. So these are my favorite bullish candles, and they're ranked in order of strength from your left to the right of the screen. The first one here on the left is a bullish candle. And yeah, because you can see that price opened up here, and at some point, sellers tried to push this down, but then the buyers pushed price up, but they weren't strong enough to close it at the candle's highs. So it closed right here. So it's a bullish candle. The second one here, it's a really strong bullish candle. Just price opens at the lows, and the buyers were strong enough to close it at the highs here. And the third one is my favorite one. Price opens up here, and sellers try to send this thing down, but the bulls, the buyers, stepped in and pushed it high, and it closed at the highs. When you see this price action, depending on the location, which is what I'll talk about later on in this video, you just want to stay alert. Similar to the bullish scenario, right? You have this wick up here, you have this wick up here, right? Showing that at some point when this candle opened here, buyers tried to push the price higher, but they failed and sellers took over. But buyers were present at some point. So this is a bearish candle, ranked number 1 in order of strength. And the order of strength is increasing this way as we move towards the right of the screen. And then the bearish scenario here, the second one, there's no wick, it shows the sellers just took over. And this third one is the most bullish one. Sorry, it's the most this third one is the most bearish one, and it's my top, like my favorite one, because at some point you see that buyers try to push the price higher, but sellers just smacked this thing right down, and we closed at lows. Okay, now I'm going to move on and talk about trend analysis and how we can use these candles and identify entries once we identify the trend. So now I'm going to move on to trend analysis and explain how trends work, and I'll show you how to use these candles to find the best entries and exits if you're wrong on a trade for the best risk to reward opportunity. So when it comes to trends, right, you always want to trade an uptrend or a downtrend. Ignore the sideways trend. You're just looking for trouble. Sideways trend, all you're seeing is the market go up, hit resistance, come back to support, go up again, come back to support, and it's doing nothing. That's called indecision. If you remember earlier, I mentioned the doji candle, the one that is just a neutral candle. That candle forms as a result of this action on the smaller time frame. This sideways action results in a doji candle on the higher time frames. So if on the smaller time frames like the 5-minute and below, you see this type of price action, on the higher time frame, it would most likely result in a doji, showing that there's no clear trend. The buyers and the sellers are still finding it out. Now, what you want to actually get involved in is either an uptrend or a downtrend. And you want to make sure that you're buying at like resistance turn support, like so here, where you see price was in an uptrend forming higher highs and higher lows, and then it broke this resistance here from here, right? It broke above, and then it came back to retest. And you can see that buyers pushed this price higher, and then the trend continued, right? And then in a downtrend, similar thing. Once price broke down this support, it became a resistance, right? And then, as you can see, on a retest, it failed and continued lower. So you want to either be trading an uptrend or a downtrend. In an uptrend, you want to buy when resistance gets broken and then it turns into support. And then in a downtrend, you want to be looking for entries, right, when support gets broken and then turns into resistance. And that's where the candlesticks that I talked about earlier come into play, for where you now start to look for entries or hints as to where you can then enter the trade once you have identified the trend. I hope that's clear. So when it comes to entry models, right, you want to put everything I've just spoken about together. We've talked about candlesticks and we talked about trends. So now that we know and understand those two concepts, now how do we find entries? This is the most important part. So make sure you stick around. So with entries, right, I'm going to be talking about the bearish entry model and the bullish entry model. For the bearish entry model, now that we know that like in a downtrend, resistance is formed, right? So now that we've talked about candlesticks and trends, right, we want to now find good entries and exits on our trades to give us the highest probability trades and the best risk to reward. Now that we understand trends, I'm now going to explain the bearish and bullish entry models. So first of all, want to identify the trend, right? So we know that in a bearish trend, support turns into resistance, and then that resistance will get tested at some point in time, right? So support turns into resistance and you're seeing lower highs and lower lows, right? So on the higher time frame, when we have pullbacks to retest previous support turned resistance, right, you would usually see a green candle. Intraday, on the 5-minute time frame or lower, you will see an uptrend, right? You will see an uptrend and green candles, and you think, oh, the market is green. Yeah, let me buy calls. No, you wait and you observe the trend on the higher time frame, and you draw your resistance levels. And as price comes into those resistance levels, right, you want to now look for entries. And one of my favorite signal bars, candlesticks, is candlestick number 3 that I showed earlier, right? Basically, buyers tried to push this price higher, but sellers stepped in and closed it at lows. Now we're like, okay, there's weakness. You now want to look for your entry. Typically, I wait for the break below the signal bar for an entry, and then my stop loss would be a reclaim of this candle's high. So stop, right? And then you're gonna target this candle's low, right? And you capture a move. And you can see the risk here is very small compared to the reward that you can potentially get. Okay. Similarly, right, on a bullish setup, you would see that resistance turns into support and vice. Yeah. On a bullish setup, you will see that resistance turns into support. Sorry, I'll do that again. On a bullish setup, resistance turns into support. And once you identify that, you now want to stalk and look for entries. Like I said, on the lower time frames, when we see a pullback into support, it's a mini downtrend, right? Hence, you see this red candle. And one tip I want to give, it's a good tip, is once you see the pullback into support happening, you want to like watch for the speed of this candles as it approaches, especially on the lower time frames. I trade on the 1 minute, so the speed, if it's coming down really fast into the support level, it most likely would not work, right? Coming down really fast with strong movement, it most likely would not work. Okay, it's really getting close, like maybe around here, you see, and it's slowing down a little bit. There's a high chance that the trade will set up for us, right? So similarly, right, sellers try to push it below support, but the buyers stepped in and pushed it higher, right? So you want to enter this trade once price has broken this signal bar's high, and you want to target this candle's high here, right, for your TP, and your stop loss will be just below this candle right here. You can see the risk to reward would be in our favor, right? You get at least a 1 to 2 risk to reward on these setups. So thank you for watching up until this point. As promised, I am going to include a bonus video just breaking down a trade I took using a similar entry model. So hope you have stayed up until this point. I'm pretty sure this video is long, and if you stayed, thank you so much for staying. We'll get right into trade review. So I'm going to be breaking down a meta trade I took on May 2nd, 2025. But before I do that, I'm just going to give you some context as to why I felt confident taking this trade on Meta. So on April 30th, right, Meta had earnings after the market closed, and we had a strong reaction because they beat they had a very good earnings, right? They beat all expectations. So Meta, as you can see, rallied and after hours. It broke like 550, that it would 550 level. It even like rallied to 590s. And then when the market opened up the next day, May 1st, we sold off, like profit taking obviously, but we still maintained this 570 level, right? Um, on Meta, and it was consolidating for the most part. On Friday, May 2nd, which is the day I took the trade, right? You can see that Meta gapped up. Great sign. I'm like, okay, Meta is looking strong in pre-market. So I marked my levels, right? And this 578.73 level was a strong key level. As you can see here, like on the day where it sold off, right? You can see that it kept on trying to break above, but it would fail. And towards market close, you see that it kept on resisting this 578 level. So in pre-market, when we had broken above it, right? If you can see that even in pre-market, this was a strong area. And when we had broken above it, I was like, okay, let's see how Meta will react around this 578, because Meta is such a spready stock, right? 578, 583 area, right? And one thing that gave me confidence was I noticed on the higher time frame, like on the daily time frame, Meta was above the 200 moving day average, and the 200 moving day average coincided with this 578 level. So that was a confluence. Things were just aligning for this to be an A plus trade. So when the market opened, what did I do? I was like, now I want Meta to obviously drop into this level, and I want to see strong buying action around this area for me to take the trade. So I watched Meta sell off like slowly. You know what I'm going to do? I'm going to replay, right? I'm going to replay the open here so you can see it. And now play. So here is where I now entered this trade, right? Once it broke above that candle's high, and then my stop was right below here, because at that point the move would have been invalidated if we got a candle close below this 578.73 level, right? And my profit target was just high of day, which would give me a 1 to 2 risk to reward, which is my bare minimum, right? And I remember that day on May 2nd, we had news at 7 o'clock. So I was hoping for this move to happen really quickly so that I take profit and I am not in the trade at 7 o'clock when we have news, because then anything could happen. The market could reverse and the setup will be invalid. So, yeah, as you can see, trade's working, right? I've been panicking and would have stopped out there, but I didn't, because I noticed all the market did was just retest this candle's high, which is really bullish, right? So we got the move, and at this point, I exited this trade at that point because it had reached my profit target, and I got out for like $100 profit, 119 to be exact on this trade. I later started to feel really bad FOMO because at 7 o'clock the market just pushed higher, and this would have been like a really, really, really solid winner. But I stuck to my plan and exited where I was, and I just went about my day. Um, Days like this, you're just like, why am I trading just one contract? I would have been able to scale and all of that, which is true if I had more than one contract. This is where like scaling comes into play. You take one off a high of day, and then you take one off when it breaks pre-market high, and you take another one off maybe at like previous days high break, and so on and so forth. But you get the gist. But you get the gist. This was a good trade, high probability setup. I gave you the context, I gave you the plan. Um, it's really that straightforward. You just have to trust it. And if it doesn't work, you stop up. You literally have a one candle stop loss, that makes sure that you don't lose too much. As long as you follow your stop loss and you don't average down on the trade. So that's the breakdown.